All right, good morning, everyone. Louis Sportslino, Man Over Market, and today is the 24th of November. Tomorrow is a very important day. It's my wife's birthday on the 25th. I better not forget that. We may give a shout out to Aunt Julie. Thank God she didn't hear it about the remark about the cooking. The cooking. We'll be sitting outside when it comes to Thanksgiving. Well, as they say, there is something rotten in Denmark, and I don't think it's the cheese, right? Uh, I'm looking at bonds. I'm looking at the move that we made overnight. We're down significantly. Gold's starting to rally. Oil is a disconnect. I don't even look at oil as it compared to the market anymore. But so, you know, one time I said to myself, I was wrong. It's hard for me to get that out of my mouth. I was wrong. And then I found out I wasn't wrong. I was really right. So the only mistake that I could make was thinking that I could have been wrong about a particular subject. So I keep talking about all year how I thought the Fed will not raise rates this year. So they gave the market a big scare. It became very resilient. And now, are we still dependent on data? All right. So we've got a lot of reports, a lot of news out today. Okay. And, I think if the market goes down to the 2040, 2050 area, that would be healthy. We can spend some more time there. But, the thing that's concerning me, we got the bonds rallying and we have gold rallying. So I don't know. We're going to see. I think that now the market's getting a little skittish to see if they will really, really go through with the raising of the rates. It's almost like what priced in about 65% right now. So let's go and take a look at the market, share the charts, and get into the trading day. All right. Make sure if you got questions, you get them over to Anthony. I'll do my best to answer the questions. Let's share that chart. Share. All right. Let's look at news today. Of course, we put our news out in Central Time. So we have 7:30 Central, Red Book, 7:55. We got S&P K Schiller at 8 a.m. Central, Consumer Confidence, 9 a.m. Central, Richmond Fed Manufacturing Index, 9 a.m. Central, State Street Investor Confidence Index at 9 a.m. Central Time. Okay. So that will be stuff that will influence the market. Okay. 2-year note auction, 12 p.m. Central Time. So that's what we've got going on with news this morning. Okay. It was a very slow day yesterday. We had that nothing was released after the sunshine expedited meeting by the Fed. So let's go and take a look at the here you got a Globex low right here of 2065 half. Okay. Also, I kind of look at this to see where the market kind of did some bellwether here, right? We got some bellwether. This was an old low at 2075 quarter that was finished. And then I kind of look at the bellwether and see, how did we break out through that? So I'm looking at like a dual bull bear zone of 2076 half here. Let me put this back together right here. And I take a look and see, all right. And then I move back up to the top of the range. And I look right here and I see the bellwether. And when did we really move out of that? And that's probably right around here, our bull bear zone today. Okay. So let me look at, there's the top 2087 and a quarter. Okay. Yesterday, was like basically, a nothing day. And at the end of the day, we had a little sell off, or, we traded at the upper part of the range all day. And then finally just went down, made new lows here on the Globex lows. We finished these in the overnight print. However, this to me, all right, has to be finished in the real market, meaning the day market. So we have to cover those up for those to be really finished single prints for me. That's just my own little sort of way that I like to look at profile. Okay. Same thing with this 25, 2075 and a quarter. I think if we get up there and we trade in the day market, look, the way I look at, so when we give you profile, we don't even look at the overnight. I feel, and most traders and people that use profile look at, there's two school of thoughts. Like the market has to be looked at once. I don't look at it that way when I'm talking about the stocks and the stock indexes, because they don't trade overnight, right? So the commodities do trade overnight. So then those we will use the full 24 hours because they do trade overnight. So looking at this market, we got a double distribution. I think we're going to trade on both sides of the market. There's going to be some news dependent. This is unfinished down here. Okay. All right. And then if we should get down there, I think that the market could make its way down in this area, which is the 2053 to 2050 area. All right. When I go over here and I take a look at this. Okay. All right. All right. So this is sort of unfinished down here. You got some single prints. Okay. So, it wouldn't be an unhealthy thing, right? I just think that the market, and then we have some more unfinished right here down to 2041, down to 2043. Okay. And so the market trading down and the other, the gold, and let's go to look at this from a full point of view here. All right. So we had a smaller IB range. So we got 2093. I'm not IB range. I mean, value area is the high. 2091 in here. Okay. Value point of control. And then the value area low of 2084. Bull bear zone at 2080. All right. Remember, our first stop will be that 2076 half. Okay. All right. I have this is a 15-minute chart. Let me put a 5-minute chart up. All right. So we've got the 5-minute pivot in a sell. All right. Okay. And so the 5-minute pivot's right here at 2076. Okay. All right. That's that area that we talked about where I did the split also. It seems to come in at 2076. So that's going to be an important area that we're gonna look at. All right. I've got the Russell in a sell. Okay. And I have the Dow. This is a 30-minute chart. Let's make sure we get everybody look the same. All right. There's a 5-minute chart, 17,693. Okay. And then I have a 5-minute over here on the NASDAQ. All right. Right there. Okay. So the markets are starting out in a sell today, and I think that you're going to get a two-sided trade. I think that the news is going to affect the market today. But remember one thing, all right? News dependent. Will the Fed raise? Will they not? I don't even know what's going to happen if they do get a quarter point. I have no idea what will happen. But let's take a look at gold trading way above value. 1069.70, V pocket 1067.70, value area low at 1066 half. I got a bull bear zone at 1072.30, so that's up here. Okay. All right. Let me move this down. Okay. So it's gonna be in here. All right. Bull bear zone 1072.30. Right in here. Okay. Which, if you look at their 5-minute pivot, the 5-minute pivot is right here at 1073.70. Okay. All right. So we got a little bit of a rebound on the gold. And then I'm looking at the bonds here. And we're talking about, what did I say, Anthony? We got bull bear zone for bonds. 154.30, which is up here. The bonds are trading up here at 155, way above value, 154.29. All right. So right down in here, we got the same price, 154.30 is up in here. Okay. VPOC 154.23, value area low 154.17. And then we should change this to 154.30. Okay. All right. Sorry. Got to the game late today. All right. So still expect holiday trade, and that's more of the same. I think that the funny thing is, when we were trading back in the old days in the pit, okay, the Fed. I hope I didn't close that, Ant. I think I closed it. I'm going to have to rebuild that chart. All right. So the funny thing, let me close this up here. Stop your screen sharing. Stop screen sharing. Okay. So back in the old days, it was nothing for the Fed to make an announcement midday. Okay. I don't think that will ever happen anymore. I think that the market is too dependent on the Fed and the news and what it's going to do. And I'm telling you, it's still so mind-boggling. I say this all the time to me, that a quarter point in the interest rates is making such a big deal. 7 years of zero, I guess. But I lived in times where the rates were at 19% in 1981, right? The prime was up there. So this is still really, for me to wrap my brain around all the fuss over a quarter point is really something. So anyway, I just think that the market may get some activity today based on all the news, but given that we're and tomorrow is the day before Thanksgiving, so you may get some action where people are flattening out their positions. So that's another aspect, because we'll have the holiday. Are the markets closed Friday? Anthony, do you know? Check. All right, he's going to check the CME website. Traders will like to flatten out, and especially if is it just electronic? I think it's noon close. Okay. I'll put it out on Twitter. Yeah, we'll put it out on Twitter. But going into a long weekend into Monday, especially with all the things that's going around in Brussels, Europe, the terrorist ISIS, this whole issue. A lot, some traders, want to make sure that they don't have some exposure to things that they can't control. All right. So I think the market is going to give you a little volatility this morning. And, based on what I'm seeing, I think some people are unwinding some of their positions. And as far as the S&P is concerned, barring any horrific news, I still think that the S&Ps are going to be heading higher by the end of the year. All right. Now, noon close on Friday? Okay, noon close. Any questions over there? All right. Okay, so everybody have a good day trading. Try not to get yourself caught in with this market volatility going into the holiday and ruining your Thanksgiving. Okay. All right. So stay with us on Twitter and we will keep you informed. All right, everybody. Talk to you later and good luck.